Good morning, everybody. Hey, CJ. Hey, Philip. Hey, Omar. Hey, Dave. Dr. Serena, Devin, Jody, Timothy, Ivano, Armolfo, Cam, Stacy, Dave, Robert, Rosalind, Wardog, Pete, Dennis, Penny, Darren, Ricky, Richard, Rebecca, Jeff, Steve, Rachel, Glenn, Kevin. Good morning, everybody. Good morning, good morning, good morning. Hope everybody's having a nice morning. It's nice and warm here in Ponte Vedra Beach. We'll be starting in just a minute from the left coast. Yeah. Hey, Brian, Stephen, Larry, Pam, Karen, Michael, Peter, Kevin, Glenn, everybody's here. Larry, Nathan, don't forget, guys, hit the thumbs up button. Hit the thumbs up button. The only two rules we have here is let's ask questions that are in context so I can answer them and we can continue. Don't talk about current open trades that we have, and participate and have a great time. All right. Good morning, Chris. Ooh, Idaho. Yeah, and hit the like button. It helps us gain more viewership. We're now averaging about 550 people a day. When we first started, I think we were getting close to 400. Now we're at 550. My goal is by the end of this year to get close to 600 and then get up to 1,000 before the beginning of next year. Dr. Serena, I hope you're keeping track of doing your actuary work. Good morning to you. Cam, good morning. Woo, 20 degrees in Albuquerque. Ralph, good morning. Robert, how are you? Good morning, everybody. We'll be starting in just a minute. Let's see. We got about 140 people here. We could start now. All right. So let's talk about what's in play. All right. You have me hooked on Landman. Yeah, I love that show. I was just watching it last night with my wife actually before we went to bed. Billy Bob is like perfect for that role. You know, the casting is really good for that show. Ooh, 9 p.m. in Manila. My goodness gracious. That's something. All right, so let's start things off with a CTA, and then I'll stop the CTAs, and then we'll get into everything. So first things first. You guys all know T-Buzz. He's a really good friend of mine. I'm very happy to announce that we're joining forces, and I'm going to share you guys something very, very interesting. It's something to help you guys take advantage of a new set of options launching on the CBOE exchange. T-Buzz is on top of it, and we're going to be doing it at 1 p.m. tomorrow. Here is the link. All right. He showed me a new way to trade options by CBOE, which I think is really, really cool. Yeah, Landman is really good. Good morning, Rich. Good morning. So here's the link for that. That's happening tomorrow at noon. I will be in my VIP room at noon as usual today. Nothing will change there. And Customer Service Live, the Cam and Gustavo show. Let me just get there, give you guys a link so you guys can enjoy that as well. And then we will get started. Thank you, Dr. Serena. You're doing God's work. Thank you so much. I appreciate it. Certainly have moved up, right, Dr. Serena? A lot more than 200. It used to take us like 20 minutes to get 200 people. Now we get them in 3 minutes. This is fantastic. You guys are making me very happy. Thank you for all of you. All right, so where are we right now? Well, good morning, Scampy. Well, the problem is we still have divergence. Divergence. Anytime we have divergence, I cringe. Why? Well, I'll tell you what, it's not as common as you may think. And it's really bad for the market. Why? Well, think about it. It's just real common sense, and it really is common sense. And I'm not just saying that. If you have half of the market going down and you have half of the market going up, where do you think you're going to get? That's the problem. That's the problem. So what I really like to see is I like to see everything congruent. Typically, when you have divergence, it leads to choppiness and not a lot of trading range. Hey, Carlos, good morning. RP says you're making us happy. Well, thank you. Thank you, RP. Rosalind says, where can I watch Landman? Oh, I don't think it's for free. You have to have Showtime. It's on Showtime. It's a Showtime show. So you have to have Showtime or Paramount with Showtime. But it's really great. It's a great show. It's a fun show. Yeah, Paramount Plus. Well, actually, Cam, if you have Paramount but you don't have Showtime with Paramount, no soup. So you got to have the Paramount with Showtime. You can probably go on Amazon Prime and just buy the episodes if you really wanted to. Or you can get a subscription to Showtime for a month and just see how it goes. All right, all right. So anytime we have divergence, it's a big red flag because again, it's very difficult for futures to figure out what's going on. And again, people, what a lot of folks do before coming in here, they seem to. It was Darren. It was fantastic. I love how the mobsters are now coming into the whole thing. Uh, what I love to see is a market that's concentrated where everything is moving together. It's very hard to get institutional flow moving in the right way when you have some parts of the index that are down and some parts that are up. What I'm hoping for is the Dow will snap back because it had some positive upgrades overnight and join the Nasdaq because this is very random. This is random too, but this is really random. So as far as I'm concerned, we're opening up slightly bullish right now. Hey, Angie, good to see you here. Good to see you, Angie. Good to see you. Thank you, Bob. So big red flag right there. Big red flag. What's the other red flag? Well, the other red flag is we have a CPI report tomorrow. Now, after the Fed decided to lower their rates and start lowering their rates, the CPI and the PPI report have a lot less tailwind. But these are the only major reports this week, and I think the market will be looking at it. Now, what's really sucks, and we talked about it yesterday, is the here's what the part that I really hate, okay? What's priced into the market right now is a shitty report. Look, 2.7 year over year, 3.3, which is this basically the report is presuming baking into the economy that inflation has not made any progress. Consumer prices have not made any progress in over a year. Now you're probably going, Roger, I didn't have to wake up at 2 o'clock in the morning in Alaska and hear you say that. I can just go to the grocery store and I can kind of figure that out myself. I mean, I know what eggs costed a year ago. I know what meat costed a year ago. I know what juice costed a year ago. And it ain't any better now. And I could assure you it's not. And everybody sitting here, you may not be stock market experts, but everybody here goes shopping, right? So it's sad that what's already baked in is a crappy report. In other words, even if the report comes out and we come out worse than we were a year ago, the market will still assume it's normal because that's what's baked into the price right now. This is baked into the price. Point is, if the report is one hair better than it was a year ago, that means everybody's going to get excited and happy. Well, it's great. It means things are getting better, but the putting a bad report and bad expectations in front of us and telling us things are getting better, it's just not my idea of the Fed doing a good job. Okay, so I think they need to address this. Like this is like the pink elephant in the room. Like Powell can say whatever he wants to say, but why is inflation worse than a year ago, and why are they lowering rates? That's the only question I have. Inflation is worse than it was a year ago, and you're lowering rates and pissing on our leg and telling us it's making progress. But it's not, okay? The rate of inflation is getting better, but actual inflation is not, okay? And the bottom line is that's what you're paying in the store. So the point I'm making is the bad numbers are already priced in. So for the report to really disappoint us, the numbers would have to say that the inflation is not as bad as it was a year ago, that it's much worse than it was a year ago. And I mean, to me, that's Mickey Mouse economics, okay? In my opinion. Thank you, Eric. I appreciate it. Yeah, Rosalind, I don't know. You're going to have to, you need Showtime. You need Showtime with Paramount. It's like $8 a month or something like that. And you can get like a 30-day trial. And if you don't like it, you can unsubscribe. All the Sheraton shows are on there. Landman, all the good stuff is on there. That's Sheraton. He's one prolific writer. So again, this is not something I'm very happy about. As far as earnings today, we have MDB, which I think beat estimates, and we have Toll Brothers. I think Toll Brothers comes out after the market closes. Let me just take a quick look because I'm looking at home builders to crap out. If they crap out, we're going to have a nice little breakdown. But I haven't seen that yet. Oh, there we go. There we are. Okay, we do have it. There we are. Remember what I told you? They're very insensual. All the home builders, all the home builders. So I'm going to start looking for some really weak home builders because this is a really bad report, and this this is one of the reasons why I believe the stock. Now I understand why the Dow is a little bit lower. This is a very, very nasty report, and that's putting us below the 50-day moving average. Remember I told you yesterday, if the report is, of course you do. You guys pay attention. Jeff, that's the next one I'm going to start watching. That's I'm watching the first season of Penguin right now. I just finished Boardwalk Empire, and then Lioness is the next one I start. Anyhow, the fact that we're below the 50-day moving average is not great. This stock still is pretty strong, but if I could find some stocks that have been in a downtrend that are breaking down that are home builders, I will not hesitate. I will not hesitate. Eagle says, "Hey, Eagle Beagle, how are you? What can Powell do? They do not have the issues needed for November cut now. They are, yes, you are right. You are so right. Come on, guys, hit the like button. We got 330 people here. We should have 150 likes by now. Let's see what we got. We got 114. Ugh. Folks, hit the like button. Hey, Ed, good morning. So again, this is not good for the market. And remember something else. If home builders are off, what does that talk about consumer electronics? What does that mean for car? Remember, when people buy and build homes, that's when the economy really spruces up. So when this is like you know how semiconductors are really influential for technology? Well, this is really influential for blue chips because home builders. Remember what I always tell you, when people buy homes, they tend to spend a big bulk of their money. They tend to buy new cars. They tend to buy new clothes for their kids. When people buy homes, it tends to be like a big period in their life. Consumer electronics, tools for their sheds. You guys all know what I'm talking about. So we have to pay a very close attention to consumer discretionary sectors today that are involved with homes building, home construction, anything relating to the homes. I'm glad I looked at this. Yes, consumer discretionary will suffer, Jeff, especially as it relates. I mean, I don't know if consumer discretionary like Amazon and Apple will suffer, but more meat and potatoes companies will, which is one of the reasons why I think the Dow is going lower. This is not good. The good news is these sectors are pretty much anything relating to homes, home builders, and expenses, but it doesn't go beyond that, okay? So big red flag. Please don't try to buy the low. Please do not buy the lows. Volume's increasing. We just broke the 50-day moving average. The question is, are we going to make a higher high than these levels? Which we may, if we bottom out right here. Even if we bottom out right here, we could still go above these levels. But we want to be above these two highs if we stay up. If we break this level right here, the 100-day, and break this level right here, the odds are we're going to go lower. All right. Yeah, we need 300 likes. There you go. All right. One more time. I have a special launch with T-Buzz. I haven't done anything with T-Buzz in a very long time. It's a special trade. You guys will love it. Here's the link. It's happening tomorrow at noon. Here's the link for that. Here's the link for my VIP room at noon today, where you guys can ask me questions. We can review things. With inflation in the past, you get a second wave where wages go up. That's absolutely right, Graham. You're absolutely right about that. This guy knows what he's talking about. Deb, good morning. James, good morning. Good morning, everybody. And last but not least, Customer Service Live. Cam, what are you going to talk about on Customer Service Live today? What's the topic? Cam and Gustavo show. Hey, Mario, good morning. Okay, so just I went off the rails a little bit because I was curious, but I'm glad I did this. Red flag home builders today. Red flag home builders. MDB actually got upgraded, so that's okay. And tomorrow we have GameStop, which isn't all that instrumental. In terms of other earnings that are coming out, you have AutoZone, that's another stock that can, believe it or not, AutoZone, Toll Brothers, those are consumer cyclical stocks. Those can influence a lot of things. Nothing really that crazy, but that's a Sigma and AZO pretty much. Those are the only real big ones here that we need to pay attention to. Okay, bond market. Well, remember I've been talking a lot about the bond market. So are you moving your room tomorrow? No, no. The session, Bob, the session with T-Buzz is at 1 p.m. My room tomorrow is at noon, as it always is. So my room is at noon. T-Buzz will be right afterwards. Yeah. Now, somebody just said MDB is down 9%, but I want to show you guys something. They're down, but look what they did. They raised their full year guidance. They raised their full year guidance, and their numbers were better than expected. So yes, they're down 4%, but as I said, they beat their numbers and they raised their full year guidance. So I don't understand what this is all about. Just FYI, because Philip, you mentioned MDB. I wanted to just give you heads up. Yes, we still have a pit trade. Yeah, we have a pit trade. It's a swing trade. Yes, I put on. Don't mention the name, please. All right. So bond market. Remember, we didn't know what was going to happen here, and I told you there's an inverse relationship between the U.S. dollar and the bond market. Right? Very important. Well, we look like we were going to come up here. Yesterday, we went right to the 200-day moving average, and now we're at the 50-day line. If this is the peak here, remember we had a long discussion about this yesterday. All right. Hey, HG, how are you? Yeah, I'll talk about earnings in a minute. I'll talk about all of that in a minute. All of it. All of it will be talked about in a minute. So we tried to break out. And remember what I told you. If we break out here, it's going to relieve some pressure from stocks, and it's going to give us some upside. We couldn't break. Remember this? And we talked quite a bit about it. I said we're right now pinched between the 100-day and the 50-day and the 200-day moving average. We have a whole bunch of, we have the year-to-date VWAP, we have the 8-day EMA, we have the quarter-date VWAP here, we have the 50-day moving average. If this breaks, the next point is the election VWAP, okay, which is at 91.74. And we have a nice gap here. Be careful. Now, why is this important? Well, if bonds go down, interest rates go up. And if interest rates goes up, it puts pressure on interest rate sensitive stocks like Russell 2000, like home builders, which are definitely in play today. I know I'm talking a lot about home builders, but there's a reason for it. They are like the chip stocks for consumers, so be careful. So look, we're now at the 50-day moving average. We couldn't break out. Remember, we were hoping, but I said we got the 100-day ahead of us. We do this every day. If you're not familiar, you could just review to yesterday's session. But that's right, Eagle Beagle. Capital punishment violation. Exactly. Yeah. The people who mention ticker symbols of open trades get put in a corner. So if we break this 50-day moving average and this quarter-day VWAP, the election VWAP will be next. But this is telling us that anybody bought over the last quarter is not doing all that great on the bond market. And the next one is VWAP. If we break this level, that means anybody bought between election and today is now not in control of their money. That means they're losing money, but we're still not there yet. We're still at the 100-day, and there's a good chance the 100-day may hold. Now, why am I talking so much about the bond market, right? Well, look at the US dollar. What happens when the bond market declines? It increases interest rates. What happens when interest rates get higher? It boosts the US dollar. Remember, the US dollar looked like it was going to crap out, and I said, don't give up on it yet. Let's see what the bond market does, and look how it turned around yesterday. So the US dollar is now turning around. The good news is gold so far is following along. I mean, I'm reading into price action. I mean, if you want to know the truth, I mean, this price action here is not really anything to write home about. Either is this right here, but the fact that bonds are in fact cooling off is giving us a little tail boost in the US dollar right here, right there. So if you see the US dollar rallying, that's not really great for our economy, because then things cost more money because the US dollar is getting more expensive. Meanwhile, gold is still moving higher, which I'm happy about, But remember, their correlation is not day to day. It's a general. It's like correlation between the Dow and the Nasdaq. It's not day to day. It's over time you'll see it, but not minute by minute. So far, I'm liking what I'm seeing on the gold market. Um, this is a nice consolidation. I would obviously wait for us to. Uh, I would want us to break above this level, and ideally, I'd like to break above 2780 before going long gold once again. Okay, U.S. dollar. I like the U.S. dollar, but I would like to see U.S. dollar break above 106.53, and I would need to see a good breakdown on the bond market. We're not going to, excuse me, we're not going to get anything major today. If anything, it'll happen tomorrow because we have the CPI tomorrow, and we don't really have any news today aside from productivity and costs, which are going to be an absolute nothing burger. Okay. All right. China. Remember what I told you yesterday about China? I drew this line for you and I said the odds are this is going to be exactly like this. Well, we're now all the way here. It's kind of funny, right? It usually takes a few more days to happen. But remember, guys, I said, remember I drew this line for you yesterday? And I said, the odds are we're going to just come back up and we're going to come right back down. Well, guess what? This is where China is right now. So much for their stimulus rally. And again, notice it couldn't get above here. Let me delete this trend line. Notice we are still in this range right here. We're still in this range right here. So my theory is we're going to come break the 50-day and just come right back down here. We're going to chop around or finally break this level and then start hitting the 100-day and the 200-day. Because if this is all they've got in terms of stimulus, you could see the impact it had on their market. I said exactly that, Carlos, yesterday, right? I mean, it was funny, but I literally drew this line. Guys, if you don't believe me, go to yesterday's video. I literally said, I think this is going to be another one of these. And we're going to come right back down. What is the status of the stimulus? We're going to read about it right now, Nathan. I'm glad you asked. We're going to read about the news right now, as soon as I get past the global markets. So, bond market, watch it carefully. Watch the bond market carefully, especially in light of this news on home builders. I know you're like, Roger, you got to get off this home builder topic, but I'm telling you, imagine NVIDIA and tech, home builders, and blue chips, because the impact of so many things surrounding it, okay? I know you're like, enough, get off the home builders topic. But I'm telling you, there's the world, the economy, according to Scott Stradamus, write a book. There you go. Anyway, so you please keep your eye on the bond market. The bond market is going to be really, really telling. If the bond market comes up, it offsets some of the downside from these home builders, right? Because bonds going up means lower yield. But if the bond market goes down, it adds fuel to the fire to the home builders. Okay? Yeah, I'm going to wear it tomorrow. That's my shirt for tomorrow, Cam. I was going to wear it for the webinar. Rewatch your last couple of pit sessions. You have called everything that crystal ball is something. Thank you, Darren. I appreciate it. Yeah, the pit is something, right? Yeah, I tell people they should sign up for the pit. There's nothing like the pit. Actually, it's not about expectations. It's about what it's doing with price. Remember, a lot of home builders, Dave, keep something in mind. A lot of home builders were expecting interest rates to go lower when the Fed lowered rates right here. Look, let me explain the dynamic to you guys, okay? So I think, please correct me if I'm wrong, but I believe the Fed lowered rates right here, right there, okay? And when the Fed lowered rates, right, they thought the bond market was going to go higher, okay? Because look, they're lowering rates, they're expecting a breakout, right? And it would have been great. And then interest rates would be lower right now. But when they lowered rates right here, the bond market fell off a cliff. And this is what decides what interest rates you're paying on your credit card and your adjustable home mortgage, not what the Fed is doing to the 3-month note. The 10-year, the 20-year, and by the way, when you look at this and you see 20-year plus, just so you know, anything over 5 years, 5-year, 10-year, 20-year, 30-year, they're going to virtually mimic each other because that's the bond market trying to guess where it'll be 5 years from now, 10 years from now, 15, 20, or 30. And the guess of 5 years is just as good as it is for 30 years. So don't let this catch you off. Well, is he looking at the 10-year node, the 5-year node, the 20-year node, the 30-year node? Notice it's 20 plus. 10-year, 20-year, 30-year, 5-year, they all are doing exactly the same thing. So don't let that catch you off. So now the Fed is in a pickle because these home builders all thought that people were going to start buying homes right here because interest rates. So they started increasing their production more and more and more and more and more and more and more, right? And look what interest rates did. So this and everybody here who has an adjustable mortgage or who has credit card debt is shaking their head going, you're right, I'm paying more. Interest rates went lower, but my interest rates went higher. What's up with that? Well, the Fed can't control the bond market. The Fed can only control the short-term rate. So that's why Toll Brothers and all these other companies, they're like, what the is going on here? This was supposed to keep going up. That's why I said I wish the Fed didn't do anything till after the election, which was right here. Look, let me show you something. Here's when they lowered rates, and here's the election. What happened after the election? Up. What happened when they lowered rates? They went higher. So what Trump was saying, and was saying, please don't lower rates till the election. They would have kept everything speculative and the bond market would have stayed around here. And then we would have had the election and bonds would have rallied because they like Trump. So we would have had a 1-2 punch. But no, Powell couldn't do that. So again, I'm not trying to get political. I'm just trying to explain to you the trajectory and why these home builders feel like they got screwed because they were expecting a gift right here. And what they got was a burden. Oh, my dogs are going crazy. They didn't learn what happened in China to make spike yesterday. They promised more goodies for people and stimulus. This time frame, if you're a builder, to tighten up your costs and wait out the storm. Exactly. Versus going crazy right now. Like they started building crazy in my neck of the woods. So again, the Fed, the worst thing they did was lowering rates when they did, because look at the impact it had on the bond market. It had the opposite impact. So again, don't get me started on there. All right. So now you understand. In China, they promised stimulus the other day, and they got babkas. They got nothing. Okay. All right. So gold, you guys understand. U.S. dollar, bonds, volatility. Volatility started spiking yesterday. Remember yesterday I drew this line for you. Yesterday I drew this line. I didn't draw it after the fact. I drew this line for you yesterday morning. Look where volatility is compared to the line that I drew for you yesterday morning. Hey, Bob. So for those of you who are like, well, why should I come here every day? Look at the line I drew and look where volatility Look where volatility is right now and look at the line I drew for you yesterday. Yeah. So you see volatility went straight to 14, which is the level I told you yesterday we need to watch out for. The next level is 15. And then we have a big pocket here between 15 and 17. So let me just kind of raise this to 17 to make it a little more believable, easier to read. So there's a big pocket here. So if we move above 15, it could really skyrocket and pushing us lower. But we can also cool off and go right back down. So we got to pay very, very close attention to volatility today, because volatility is either going to go back to 15 or it's going to start declining back to 12. And that's going to be determined by which one of these is going to win the race. Either the Dow, which is now down 100, it was down 50 when we started, or NASDAQ, which is doing the same. One of these is going to overcome the other one, push the other one either higher or lower. I'm telling you, it usually is what happened, like yesterday. You guys have been around the block before a few times. So volatility, the level we're right now exactly where I drew the next line, where I drew the first line of support yesterday at 14, because there's a lot of stuff here. And next level is right around 15, and then you have an air pocket right here. which will take us all the way to 17. So the last thing we want to do is trade above 15, because if we trade above 15, there's a big volatility pocket. And then the worst thing we can do after that is trade above 18. So the levels you want to watch are 15 and 18, because if we trade above 15, and if we trade above 18, yes, I said the little sound effects there. No, the mornings are very important. How many people we got here? 448. Come on, guys. Give up more thumbs up. Let's see how many thumbs up we got. I'm going to check here. And remember, if you guys have any questions, customer service questions or installation questions, the Gustavo and Cam show is the place to be. There's the link right there. We have 185 likes and we have 444 people in here. We've only been here 31 minutes. Let's try to get another 100 people in here. And let's try to get another 100 likes. Hit the like buttons. Yeah, that's right, Angie. So volatility, very important. I hope you guys are taking notes. My suggestion would be to watch the bond market really closely today for this breakdown and see if this thing wants to come back up between, because there's a lot of stuff here. You've got the year-to-date VWAP, you got the 200-day moving average, you got the 8-day EMA, and you have the 50-day moving average, and you have the quarter-day VWAP. You've got a lot of stuff here. It's going to be hard for this thing to get out of here, but once it does, it's going to either go back down here or it's going to start coming back above the 100-day moving average. That's going to have a major impact on the US dollar, gold, and not China, but China's not helping us today. So let's put everything together and then we'll talk about volatility. Now, before I put everything together, I just want to show you guys something. Including ETFs, this is including ETFs. We only have 79 stocks making 90-day highs, and we have 34 stocks making, including ETFs, we have 34 stocks and ETFs making 90-day lows. When you take the ETF out of the equation, you have 73 ETFs, 71 and 31. What does that mean? There's no stocks breaking out or breaking down right now. Remember, what happens when this is below? First of all, this is mean reverting. So when you get a level this low, it usually will go lower, 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 and then we're going to start climbing back to our 500, 600. But what does it mean when we're in this type of a range? That means there's nothing going on. There's no stocks that are moving. There are no major stocks breaking out or breaking down, which means the market is in a lull right now, which means you should be very, very careful buying breakouts or breakdowns because there's nothing continuing to move right now. There's very little continuation. This is every stock in the stock market, the price between $20 and $5,000 that it's making a 90-day high. Remember when this goes to 100, we start picking up momentum, 200, 300, 400, we're getting a little overbought. We have 79 versus 34. We have very little breakouts. Roger, should I be buying breakouts on high volume right now? Hell no. You should be buying pullbacks right now. There's no momentum right now. Look, there's no momentum. Roger, how come all those stocks you're talking about moving higher are not moving higher? Because nothing is moving higher right now. Look, there's 79 stocks making 3-month highs and 34 stocks making 90-day lows. There is no momentum right now. You're in a holding pattern right now. There's no fast moving right now. We may start tomorrow, but not today. All right. Just want to make sure you see this before we get before you get some crazy ideas about going crazy today with the market. And I'll put everything together for you. Investors are growing more cautious ahead of U.S. inflation data because this inflation data is already setting us up for a bad report. Okay. Benchmark, S&P 500, NASDAQ, and the blue chips dropped to a 1.5-week low. Now, I'm going to talk a little bit about this right now. Yes, Jeff, 90-10s, very, very much so, very possible. I'll look at them in a minute. As a matter of fact, I'll look at them right now. Let's see if we're there yet or not yet. Starting to, 14. Let's see how many we had yesterday. 4. Starting to, Jeff. Jeff, very good. Very good. Very good. See, we'll take a look. Starting to. We need another couple of days. Starting to. We're starting to. Yesterday we had 4, now we have 14. See all these tops, we need to start seeing these going down. So we need to see momentum now starting to increase on the downside because they're all waiting. They're all waiting right now. All the 90-10s are waiting. Good, but the fact that you guys brought that up, excellent. Rich says every stock that was moving higher pulled back to the 8-day EMA yesterday. Now we need a confirmation they will continue the uptrend. Absolutely right, Rich. Absolutely right. And did you notice in the pit yesterday? Was I going crazy buying and selling breakouts? Was I doing any of that yesterday? I put one trade on and we still have it. All right. Yes, the 90-10 is when the stock makes a 90-day high or a 90-day low. So look, yeah, let me go through this and then I'll go through the 90-10. Yeah, wait for a confirmation. So here's the problem. What happens when you're going higher and higher and higher and higher, and then you cool off? You've got nothing to the downside, and now you don't have anything to the upside. Here's the problem. Stocks have been moving higher, right? Which means we haven't had anything to the downside. Well, now they're at a 1.5 week low. Does that mean we're ready to go to the downside? No. We got to wait till the downside's at least making a 5-week low or a 6-week low, right? So we need to see not 34 stocks here. We need to see at least 100, right? We're not there. I mean, there's nothing to the downside, and now there's nothing to the upside. Now, do you understand why you have 79 and 34? Stocks have been going higher. This number has been moving higher, higher, higher. And all of a sudden, we're now at a 1.5 week low. Well, you can't trade to the short side. You're not in an 8. You basically have a bunch of stocks that are waiting to see if they should continue going higher or if we're ready to break down. What does that mean? We're nowhere right now. We're between a rock and a hard place. This is not a time to be aggressive. Don't try to be aggressive because the market is not aggressive right now. Okay? Roger, watch. I'll get 3 emails today. Roger, how come you're not putting on trades? I haven't seen a trade in a long time. And then they expect me to watch my morning show. I'm explaining to you why. So you guys understand if I don't have a lot of trades today, you guys understand why? You guys understand, right? We don't have any firepower. There's no waves. There's nothing going on right now. No man's land. Yes, Michael. That is a word that I use all the time. No man's land. Yeah. Right. So we're kind of like this, and then we cool off. So, okay, where are we now? Twilight zone. We're nowhere right now. We got to be careful. OMC plunged 10%, biggest loser. I don't really follow this company. Comcast slid more than 9%. The cable business is in deep shit right now. Deep doo-doo right now. I've been trying to get my wife to unplug our cable for a year, but she's too used to it. She likes her recordings and all that. Watches the 90-Day Fiancé. HG, you understand, but wait till you see how many emails I'm going to get today of people who don't understand. That's right, Rich. Thank you for explaining that in plain English. I really appreciate you doing that. In a position not making money and losing time decay. Exactly. They would rather cry to you. Yes, Bob. Yes, they would. So NVIDIA, not good. Not good day for chip stocks today. They got down. China Television reported state administrator has launched investigation. I mean, China needs to invest in NVIDIA right now. I need another dog and cat, okay? Hershey's climbed. There's talk about them taking over Mondelez. I think that would be fantastic since it would be a great idea. I think the quality would actually improve. We have a CPI report expected to pick up slightly to 2.7 year over year from 2.6. That's not pick up slightly. That's decline. Core CPI remained unchanged. So not good. We now have an 86% chance that they're going to lower rates. That's already baked into the market. And as you could see here, it's not really doing us any favors right now. I'm really concerned about the economy. I'm concerned that Powell took a position where he could have put us in a really good place, but not doing anything. And he decided to do again something he shouldn't have done. Mondelez. You put a lot of trades on yesterday. No, I didn't, Carla. I didn't put on a lot of trades yesterday. No, I didn't. No, no, we didn't. We took off some trades yesterday. Uh, I think we put on like one or two trades yesterday only. Europe down 0.38 this morning, snapping an 8-day winning streak as optimism over China recent stimulus pledge waned following disappointing trade data. China, 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 down 4%. Not good. So Europe is not giving us any tailwind. Investors digested weaker than expected trade data from China. Healthcare and automobile stocks advanced. These are blue chips. This is not technology. Okay. China ended higher today after the nation's top leaders. China, they did not end higher. I guess this is I guess this was written before this. This is China, and this is the top 50 Chinese stocks, and they're down 4%. So China is not up. I've noticed a few times they write some nonsense. Retail stocks outperformed on Tuesday. Good. Japan closed higher. Rally was fueled by optimism following a Chinese pledge to embrace a moderately loose monetary policy. Yeah, good luck with that. And more proactive fiscal policy, lifting market sentiment. Electronic stocks led gains on Tuesday. Well, that's great. Hey, Dr. Serena, perfect. Let's see if we can get 250 or 300 likes. That's the question. 300 likes. Yes, good time for income trades. I think you may be right, which is one of the reasons why I put on a income trade yesterday in the uh, weekly cash flow. Yes, that's definitely a good time. So Oracle slumped 8%. They issued below consensus guidance. That's very bad, and this is one of the biggest networking companies in the world. Per HG, AI climbed more than 6%. They raised their guidance. This is very good. It'll offset a little bit of this, but Oracle is a big player. Norwegian gained over 3%. I've been looking at these stocks lately. Goldman Sachs upgraded to buy from neutral. MongoDB, which I don't really follow, raised their guidance, beat their earnings estimates, but the stock is down 4%, which rarely ever happens. When a stock raises their full year guidance, that's a really good sign. And General Motors got a bump from Morgan Stanley, although I'm not big on this, but the fact that Morgan Stanley upgraded them is a good sign. Hit the like button, guys. Kevin said, I said no just until 1 p.m. Kevin, where's Kevin? 47th anniversary today. Congratulations, Kevin. Congratulations. Graham says Powell played politics, watched the government numbers with the lead to election, all came to expect it. See, bad numbers are nowhere near what the expectations are. Politics, yeah. Politics. All right, so let's talk a lot about the stock market. In terms of fragmentation, in terms of fragmentation, you still have consumer discretionary technology, QQQ, and Bitcoin leading. That's good. That's really good. What's not looking good? The fact that communication services and semiconductors are now falling off. Blue chips are still completely mixed up with small caps. They don't know which one is leading or not because look, you have mid cap here, Russell 2000 here, you have all the blue chips here. The question is, is tech going to come back today and tomorrow? Is communication and semiconductors going to come back up, or are these two sectors going to push these down? This is the first. Yesterday they were together. Look, communication, semiconductor technology. These have to stay together. If these two start deviating, which they're doing right now, see, communication and semiconductors next to Dow, they may push. Basically, what we're watching for now is we're waiting to see if these will start coming back up or if these will be pushed down. My bet is on these being pushed down at the expense of blue chips because we're not in a great place right now. That could all be off if tomorrow's numbers are good, and if we get a good earnings on a couple of tech stocks, that could be right. But be careful because once these start coming off, it's easy for semiconductors to push QQQ lower, and QQQ and technology are, you could see they're intimately related. So we are seeing some divergence in the market. Basically, this is telling us that it's harder for technology to rally, which we already knew by looking at the number of stocks breaking out. All right. Yeah, we closed a bunch of orders yesterday too. Yeah, I just celebrated my 24 years recently. Ah, all right. Yep, great wife, great life. 100%. Also, last time, remember I'm doing a class tomorrow, new options launched on CBOE. I'm doing a class tomorrow at 1 p.m. with T-Buzz. Here's the link for that. Here's the link to my VIP room at noon today. Wow, congrats, Bob. And here's a link for Customer Service Live, the Cam and Gustavo show. Yeah, it's great. 47 years is fantastic. So we still have tech leading, but I'm very cautious because communication and semiconductors are not helping, and these could really drive us down. Okay, what about S&P 500? Let's look at it, and then we'll move on to stocks on the day. All right. The S&P is at the 8-day moving average. Yesterday, and by the way, you may or may not remember as we were going higher here. Rich, do you remember what I told you last week? I'm getting very nervous. Didn't want you to have correlated positions. I said the S&P has to come back to the 8-day EMA, and I said there's two ways that can happen. We can either consolidate or we can come down. So far, we started cooling off a little bit, but you could see it only took one down day to get into the 8-day EMA. Now, the question is, are we going to break the 8-day EMA, or is this going to be a support and we're going to come right back up yesterday and undo the damage that we did yesterday? If we come up here, the odds are that tech will have something to say about that. Volume is still very low, and we're entering the last 2 weeks of the year, so don't expect much. The most usual scenario for the last few weeks of the year is a gradual move higher and higher and higher because you don't have selling pressure from institutions. They get bonuses based on value under management. They have no interest in selling right now. So most of the action you're seeing is retail action. Again, if we break this 8-day moving average, 8-day EMA, we're going to go to the VWAP. We're going to go to the election VWAP. If we break below this VWAP, that means anybody who bought between the election and now are losing money. And buyers from the election are no longer in control. And the next level is the 50-day EMA. So right now, the question is, are we going to break the 8-day EMA? Are we going to hit the election VWAP? And are we going to hit the 50-day moving average, which is coinciding with the quarter? Look at the quarter-to-date VWAP and the 50-day. Look how they're coinciding. So we have a lot of support below us right now, a lot. The question is, are we going to start trickling down or are we going to come back up? We don't know that, okay? QQQ, QQQ. We are not at the 8-day EMA, but there's a chance we may get there. So far, as of right now, to me, this looks like a sideways consolidation on very low volume, which means there's just not much to do in the market. All right. There's just not much to do in the market right now. We got to be careful. Well, Roger, what do you mean there's not much to do in the market? 79 stocks are breaking out, 34 stocks are breaking down. Does it look to you like we're trending? Does it look to you like anything's going on in the NASDAQ right now? But NASDAQ is leading right now. So if NASDAQ cools off, you will see these sectors start coming down. So there's a big question right now. Is the NASDAQ going to continue to lead or not? The next level is the 8-day EMA, okay? Dow Jones. I hope this is helpful to you guys. Dow Jones is already down, already below the 8-day EMA, which is why you see blue chips lagging right here. The next level is, in fact, the election VWAP right here. That happens to be near the 441 level. I don't know if this is going to intervene and hit the A line today up and go above this level, which we desperately need to see, or we're going to continue drifting lower. We don't know, and we're not going to find out for today because tomorrow we have big reports. So I'm not expecting institutions to do quite a bit. Let's get to 300, guys. Let's get to 300 thumbs. Let's get to 300 thumbs. What about IWM? Well, IWM is small caps, and that's interest rate sensitive. And interest rates, as you could see here, see right here? You see this rally right here? Look at Russell 2000. Look how happy it was during the rally. Very interest rate sensitive. But what happened right here? What happened after 1129? Let's take a look. 1129. Right here. What happened? What have we been doing? With interest rates, when interest rates stopped going higher, the Russell stopped going higher. Okay? Exactly, Carlos. So again, the next question is: are we going to hit the 8-day? Are we going to hit the 8-day? Are we going to hit the election VWAP? If we need to stay above this level, so I'm watching very, very carefully to see if we hit the election VWAP on IWM and the Dow Jones, and whether we're going to bounce off the 8-day EMA on S&P and the Nasdaq. I'm going to repeat what I just said once again because I think it's very important. I hope you guys listen to me. We're waiting to see if the Dow Jones and the QQQ hits the election VWAP or pulls back to the 8-day EMA, and we're looking at the SPY and the QQQ to see whether it bounces off the 8-day EMA or breaks through and starts hitting the election VWAP. You can clearly see that the Dow Jones and the Russell are behind SPY and QQQ because they are closer to they're already below the 8-day EMA, and they're closer to the election VWAP. Same thing with the Dow. So there's clearly a preference right now in S&P 500 stocks and Nasdaq stocks. Nasdaq stocks are pushing the market higher at the expense of interest rate sensitive and blue chips. So be careful. Be careful. Yeah, Bob, they do. At least right now in a deflationary period, they do. So those are the levels you want to keep an eye. What about semiconductors? Are they helping us or hurting us? Let's see. They certainly sure as hell not helping us. What did I tell you about semiconductors? In a long time ago in a galaxy, in a distance far, far away. What did I tell you 5 months ago about semiconductors? Nothing good will happen until we hit 265. Did we hit 265? Did anything good happen? Are they helping us? No. Are they hurting us? No. They're not doing anything right now. We're in a wait and see mode with semiconductors. Okay? Very, 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 very important. All right. Let's talk about stocks. I'll give you stocks that I like, upside and downside. Is this helpful to you guys? Is this helpful to you guys? Are you guys getting some value out of this? Let's see what Baidu's doing this morning. Yeah, that's what I thought. Yeah, down almost 4%. Yep, there goes China. All right, stocks that I like. Downside first. Rogers Communication. Volume. Volume is supporting this move. Volume. Fro. Look at the volume supporting this move. Volume. It's not random. Volume is supporting this move. General Dynamics. I got to get out of here. Thank you, Eduardo. I appreciate it. Hey, Penny. Good morning to you. I haven't seen you in a bit. Hope you're doing well. Volume is picking up. Volume. You see how volume is picking up? It's how much it's above average the last 3 days while the market's low. And what's happening? It's going down. MMS. Look at volume. Supporting the down move. Are you guys, after watching me for a few weeks, are you starting to see the importance of volume that most of you have not seen before? Volume. That's it for the short side. Only 1, 2, 3, 4, 5, 6 stocks. Why? Roger, how come there's no stocks on your radar? Because there's 31 stocks that are between $20 and $500, $5,000 in the entire stock market that are making 90-day lows. What do you want me to look at? You want me to make them up as I go along? Thanks, guys. Yep, slow today. People don't like me today. I guess they like me to get a little extra frisky. Hit the thumbs up button, guys. Hit the thumbs up button. You see this cam? I can't even get 300 thumbs up in the morning. I get no respect. I get no respect around here. All right, let's do the upside now, right? You guys want to see the upside, right? CMI. Volume, 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 volume. Restoration Hardware. Now, this stock is not going to do well if volume is picking up. But be careful. If home builders don't do well, Restoration Hardware is not going to do well either. BBWI. Same thing with BBWI, Bath and Body Works. If we don't wait for this thing to break above, but it looks good so far. But I would give it a little more time. Volume is starting to pick up. SYF. Synchronicity Financial. I like financials, actually. Volume is starting to pick up. STT, State Street. Volume. ARCC, R Capital. Volume. Volume is picking up. It's higher volume almost every day. Good. Does anybody else give this kind of a detailed analysis, guys? I'm just curious. I'd like to know if there is anybody out there that goes this detailed. Not much volume here on Garmin, so be careful. There's not a lot of volume. I mean, it's getting a little better, but be careful. We want to make sure the move is being supported by volume. Net. Volume is picking up. Look at volume, how it's picking up, supporting the move. Again, be careful today, guys. This is not a day to be a hero. Thanks, Eagle Beagle. Volume, 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 volume. Volume is low here. Look at the move. Volume starts to pick up. Look at the move. You can't have big waves without volume. Okay. KMX, CarMax. Volume, volume, volume. Look at how high the volume is last 2 days. Scampy says only after the fact. Scampy, what are you talking about exactly? Explain to me what you mean. Volume. Let me know what you mean, Scampy. If you mean I only help you after the fact, I'm trying to understand. Right here, volume, 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 volume. All right, we got 269 thumbs up. Folks, is there any other questions? Is there anything I haven't answered? This is a good time to ask before I head to work. Got to head to the office. In summary, you're going to watch the bond market very, very closely today and volatility. If you see volatility coming up to the 15 level, it's not going to be good for stocks. If you see volatility dropping below 14, it'll be very, very good for stocks. There's very little momentum driving the market right now, which means most of what you're seeing is noise, which means you have to go for stocks that have more volume, also gets detailed. Oh, I see what you're saying. Yes, after the fact, it's really easy, Scampy, after the fact. Thank you, Daniel. I appreciate it. All right, guys. So in summary, the Dow Jones and the Russell 2000 are lagging behind the S&P 500, which is lagging behind the QQQ. Why is that the case? Because technology is leading, and S&P is made up of 30 to 40% technology stocks. Tech is still leading. If tech turns around and starts falling off a cliff, we're going to have a problem, okay? Because everything else is very, very mixed. So we got to make sure that consumer discretionary technology, QQQ, doesn't come off these levels. Because if they do, what's going to be driving the market? You see? Home builders, be careful with home builders today, because of what we talked about and stocks relating to home builders. Again, watch volatility very carefully. And if you're looking at the S&P 500 and the NASDAQ, the biggest question right now is whether or not they're going to break the 8-day EMA and close today below the 8-day EMA, or if this is going to be the low or near the low, and we're going to just kind of drift back above here. All right. All right, guys, I've had it. I've pretty much said everything I needed to say. Tomorrow at 1 p.m., we're going to have a reveal for T-Buzz. Here's a link for that. T-Buzz and I haven't done anything in a long time together. It's just a one-time thing I'm doing. Join me in my VIP room. And here's customer service live. And Cam, let folks know what you guys are doing in there so they can come in and watch you guys. You're the only one that I know of who teaches before the fact. Well, Scampy, it's kind of important to know what a stock is going to do before it does it, right? After the fact, it's not fun anymore. It's kind of not fun anymore. Hey, Ali, I'll see you later. Raymond says, I started trading penny stocks 3 years ago and volume was at the top. Do not do it anymore, but kept the habit of looking for volume. Yes, volume is very helpful. Crazy About Pet says, how important is level 3 info for retailers? I don't even know what you're talking about. That's how important it is. See you in the VIP room, guys. Level 3 is so important that I don't even know what you're referring to. I'll see you guys later. Have a great day. Bye, everybody. Any questions, email me, roger@rogerscott.com. Love you all. Bye. Ooh, I'm so blue today. Look at that.